Hey guys, Noah from UrbanDigs here. I want to give you guys a quick March Manhattan update. We do have the new charts in on UrbanDigs.com. There's a lot going on out there, so we're going to take this in two different segments here. Let's first go over the numbers, and then let's discuss what's kind of going on out there in the world with the stock market and these corona fears, et cetera, et cetera. First, the Manhattan numbers. We have a mixed bag here. Some good, some bad. So we'll go over this. I'm looking at pending sales. We're up 13%. That's a good sign. I'm looking at the market pulse. It's up 11%. That's a good sign, mainly because inventory is only up 2%. So we got the pace of demand slightly outticking the pace of supply. That's always welcome this time of year. When I look at price trends, much of the same. Down around 3% price per square foot, down around 5% median sale price. Again, this market seems to be bumbling along the bottom here in terms of price action. We're not diving by any means. Now, this is the latest sales data. You have to understand these sales numbers are a reflection of what was signed into contract 4 to 6 months ago. So all those deals that are being signed today, right now, with this recent stock market sell-off that's going on, we're not going to find out price discovery on those for another 4 to 5 months. So we have to wait to see what kind of impact is happening right now in the streets. We got to wait a little bit to see what's going on there. Days on market, ticking up, 102 days, up 3% year over year. Sellers don't want to hear that. This is definitely a market that you still need to price properly in. One good sign that I see here is monthly contract activity is up 12%. We had a good February. I mean, there's just no ifs, ands, or buts about it. We had a good amount of demand in February. I feel like this market was coming back. Before this whole stock market sell-off started happening and this coronavirus fear started happening. I mean, that's really been the function of the last 3 to 4 weeks or so. But February was a good month in terms of contract activity. We have supply up 5%, but contract activity up 12%. So seasonality, we're seeing a little bit more demand this time of the year than we have seen supply coming on. That's why your resupply pace is down. When resupply goes down, that's a positive indication that the pace of contract activity versus the pace of supply is actually going in a better direction for the market. Now, one number that I'm not so crazy about right here is this median listing discount, and I'm just going to show you that really quick and go to the chart. I was hoping that we would kind of stay down here, but we didn't. We're bouncing back up. You can see right over here. We're coming down, and I saw the uptick right over here in November. But I was hoping that we would bounce back down, but we didn't. So negotiability, we're seeing around 6.8%. That means sellers out there, you need to expect to negotiate about 7% down from your original asking price. Now let's just talk really quick about what's happening in the stock market. I mean, we got this uncertainty going on. We got these virus fears. I mean, this is a different world we're living in today. We've dealt with this virus stuff before. I know the coronavirus is different. I mean, I'm no expert on this coronavirus, but we went through SARS, we went through MERS, we went through the H1N1 virus. And what's different about this virus today is, besides the fact that it's very scary and it's very contagious and the death rate is more than these other viruses, but we're such a highly connected world today. And I think the fear is spreading kind of like wildfire versus, when all those other viruses hit in the past. We didn't have that high connectivity on social media. I mean, we're really getting frontline reporting from people in Iran and China, et cetera, people showing Costco's that are running out of goods and the supply chain disruptions. So, the effect on the stock markets and the effect on consumer behavior is definitely amplified today versus in the past. I do think we're going to be okay. I mean, it's very, very, very scary. I think this will pass, and we're in that fear level right now. But when you see all this money going into treasury yields and you see 10-year treasuries below 1%, that's a pure flight to safety. And I discussed that in my last video. So investors are just taking a wait and see approach. The stock market's seeing high volatility and sell-offs. So we have this battle going on with Manhattan real estate. You got on one side of the coin, you got these people saying, well, interest rates now are at historic lows, and they are, and they're probably going to go lower with the 10-year yield. So yeah, you can lock in an amazing rate. I mean, this is really a great time to refinance. If you've made the decision to buy, this is a good time to lock in those low rates, obviously. The other side of the coin is that buyers in markets like this where stocks are selling off and volatility is high, buyers tend to be cautious, right? They tend to kind of pause a little bit. They tend to kind of take their bids and bid less aggressively. So you have this battle right now between, is it a good time to buy because rates are going down, or is Is it not a good time to buy because of this uncertainty and the sell-off that's going on? If you happen to be able to price in this fear and you can get something at 5, 6, 7% or 10% lower than what you would have gotten a couple of weeks ago or 3, 4 weeks ago when this stock sell-off didn't really accelerate like it has, and lock in these low rates, I mean, yeah, I think you're doing a good thing and you're taking advantage of the situation that's going on right now. There are deals being signed. I mean, again, last month we had 841 deals being signed. So buyers are buying. I don't know where deals are happening right now. That's the thing. With Manhattan real estate, you don't have that price discovery until those deals close. So over the last couple of weeks, we don't know if this market has taken another little dip down because of what's going on right now. We're going to have to wait to find out. But that's what I think is going on right now. I think we have this battle of wills going on between whether or not low interest rates are going to kind of boost the buy side, or whether or not that's going to be muted by the fact that buyers are pausing because of the stock market sell-off. As always, time will tell. Let's see what the numbers say. I'll be here to report it to you in real time. And until then, let's just get through this. Noah from UrbanDigs, here's your March Manhattan update, and have a great day.